Hey guys, welcome back. I don't know if you're like me, but I'm starting to get a really good feeling about August. I'm not quite ready to say we are rebounding, but there's a lot of signals in the market that sure have me feeling this way. And I don't want to get ahead of myself, but I am really excited about what we're seeing right now in the market across the entire AI hardware stack. Because it wasn't just memory today. We saw an explosive move with memory. Micron was up 8%. SanDisk 11% today on top of what it had yesterday. Western Digital 4% gain. Seagate a little over 1.5%, and SK Hynix, the ADR here, was an 8% growth as well. But it wasn't just memory. We saw the optical players moving, network, compute, everything. Today, the market bought every physical layer of AI at once. Memory, storage, networking, retimers, DSPs, optical transceivers, compute. It bought everything. And that matters because it tells us that the bottleneck is no longer sitting in one component. It is migrating across the entire system. Just take a look at what we saw today. Look at the green that you see on the board, deep green. NVIDIA up over 2.5%. Broadcom over 6.5% today. Micron, as I mentioned, close to 8%. AMD 7% before we got to our earnings. Intel over 10%. Growth across the board, across every single layer of the AI infrastructure stack that we track on this channel. And guys, that is great news because we know July was just awful. But it looks like after a couple days in August that capital is rotating back into the stack, back into the AI infrastructure build out, all of the hardware players that are involved and are critical to that build out overall. And if you've been in this community for a while, you know there's one thing we have consistently done. We have followed the bottlenecks or the constraints in the market and focused on the companies that are help solving that constraint. So we have been focusing on everything from memory all the way out to optical interconnects. And today was the day that the market, frankly, it rewarded all of us for our conviction that we have in these stocks and these sectors. Because like I said, it was a rough July, but we are starting to get rewarded. We are starting to see the making of a bull run again with strong capital rotating back into these stocks. And I don't want to get ahead of myself, as I mentioned, because it's only been a couple of days and we know we've seen some volatile days in these sectors. But it feels good right now. It feels good to have our conviction be rewarded like we have said on this channel many times, because the demand is in there in the marketplace. It hasn't changed. It never changed through July, but it looks like we're starting to get rewarded in August. So let's talk about what we saw today. Let's talk about how the capital is rotating back into these sectors. I really want to focus on the optical sector, and I want to dive into memory as well, because we had key earnings today. We'll go through those, but we know we have key earnings tomorrow with SanDisk and Western Digital that are going to drop on the street, that are going to continue to validate this sector that we track and that we love on this channel. So let's get into the tape. Let's talk about what we saw today. But if you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Let's get this channel over 40,000 subscribers tonight. I've been asking for it for the last probably 5 or 10 videos, whatever it may be. We're seeing a little bit of slow growth towards it, but I have confidence we're going to do it tonight. We're going to pass 40,000 subscribers. We'll do it together. All right, let's jump over and take a look at what we saw today. We saw the NASDAQ 100, but I actually want to jump over and just show you what I'm tracking here on my watch list. Hold on, let me change this, get away from memory. We'll come back to memory, but I actually want to take a look at some of the optical players today, because we talked about them on Sunday. We talked about them yesterday and how this sector was poised to have capital rotate right back into it. And today was no exception. We know Lumentum CEO talked about the bottleneck, the IMP bottleneck. But if you remember on Sunday, I also talked about a potential tailwind for this sector, a regulatory tailwind that could happen in the U.S. that would make these stocks surge. And those stories hit the wire today, and it just moved the stocks even higher. So I'll go through those stories in a moment, but I just want to show you some of the performance that we had today. So Lumentum was up almost 9% today, had a $69 growth on the share. It ended about $8.50. Coherent was up over 12% today. This stock has been on a tear. I think I'm coming into the week, it was about $2.50 a share. Now we're at $3.23 a share. Applied Optoelectronics has been on fire. 17% yesterday, almost 19.5% today, but we're seeing a similar growth with Corning. You see a 9% growth. Marvell up almost 13% today. That is a a much needed growth for that stock, because I know I've been hearing from many of the shareholders on this channel. And then if you look at Astera Labs, which is now I'm getting a little deeper into the networking player, Arista Networks as well. Fabrinet also had a great day, over 16.5% or about 16.5%. IPG Photonics, and go on and on. So this sector is moving in the right direction. And it's because of the bottleneck that Lumentum CEO called out, but it's also because of that potential tailwind. And when these news wires hit the media, or hit the news, these headlines hit the news wire today, it drove these stocks even further. It caused more of a surge in this sector. And you can see on this article here that was on Tom's Hardware, it says U.S. is mulling ban on key Chinese networking tech in data center component crackdown. The White House wants to impose restrictions this year. China says it will respond if necessary. But if we walk through, just understand what the sentiment is out of the U.S. government. They feel that these transceivers definitely position or pose a risk overall. The administration fears that the components could be used to steal data, install malware, or disrupt data center operations here in the U.S. And therefore, there are several U.S.-based manufacturers that make these components, like Lumentum, Coherent, Applied. It says Apple. It's Applied Optoelectronics here that Reuters says that they do not have the scale, the capacity right now, because we know that InnoLight, which is a Chinese company, it has about 27, I've seen up to 30% of the global market, and particularly here in the U.S. I think it's 30% of the U.S. market that they operate in right now. And so if I jump over to an article of Barron's that also talks about it, you can see the title here a little different. Marvell surges as China ban report reignites optical networking stocks. So these stocks have been reunited because of the call. I mean, listen, they're incredibly important to the build out for data centers, and also kind of the breaking down the copper wall. We know that. But then the call out for the bottleneck by Lumentum CEO, and now these potential tailwinds around a regulatory restriction of China, or a China ban in the data centers here in the U.S., would drive these stocks even further. And that's what we saw today, a little bit of speculative buying, a little bit of moving ahead, moving on sentiment and momentum based on some of these articles. So if I jump down here, you can see the biggest casualty of such a ban would be the Chinese data center supplier, which is Zhongji InnoLight, which generated more than half of its revenue from here in the U.S., and it's estimated by the Nomura analyst to have roughly 30% share in the global AI transceiver sector. So InnoLight is a key supplier to global customers such as Google and NVIDIA. If a ban does go into effect, and guys, this is just, it's all speculation right now. There is no ban that is being written right now, but they are proposing it and thinking about it. So the article said, if the ban does go into effect, it could still be modified or shelved, according to Reuters, but it could trigger a rush back into the optical networking stocks in the hope that the Trump administration will introduce more limits on Chinese-made data center components. Optical networking stocks were some of the most popular plays on AI spending in the early part of this year, on the assumption that copper connections would be phased out rapidly. However, worries about delays of the adoption of co-packaged optics, a technology that would replace copper wiring in data center, alongside concerns of a broader AI trade, have brought the stocks down. We saw Lumentum and Coherent really undervalued in the month of July. So these stocks are rallying back up to rightfully where they belong in the marketplace, if you want my opinion. But a ban on China-made imports might be just what the names need to pick up steam once more, to drive that momentum much more. And that's what we're seeing right now in the market. And I put this graphic together kind of to help you understand who are the key players in the AI networking and the photonics ecosystem. We talk a lot about the pure play players on the left, which is Coherent, Lumentum, Applied Optoelectronics. You also have Micron, and you also have IPG Photonics. But we also can't lose sight of, in that second and third box, we have critical players that are involved here that I think would catch a little bit of a momentum swing as well with this sector. And it's everything from Broadcom. And we saw Broadcom rallying today, up over, last time I saw it was about $4.19 a share. That was great sign for Broadcom. But Marvell, Astera Labs, Intel, on the macro systems integration and infrastructure side, you see Arista Networks, Fabrinet, Corning, Ciena, You also have some more kind of emerging photonic disruptors in light matter and POET technologies. So that's just to give you a scale of who are the companies that could potentially win as capital begins to shift back based on the bottleneck and based on this potential regulation or ban that we could see for China, the China companies that are producing components for the data centers. So that's one piece I wanted to cover. And then I want to jump to the earnings that we saw today. Remember, I talked about it last night, that these were going to be key earnings for us to kind of reflect on and really try to understand the signals that it is showing for the memory sector moving forward. So all three of them, actually all four, SpaceX did as well, but AMD beat, Arista beat, and Astera Labs beat. And if you just drive into some of the key components, you see that AMD's revenue is up over 50% year over year, 11.5 billion. Its adjusted earnings per share it beat as well at $1.66. And if you dive in, really, it's those top three market signals. So the data center revenue was just under 7 billion. So 6.7 billion. It was a 107% increase year over year. Management guided for a strong quarter, 13 billion plus or minus 300 million, signaling for continued AI momentum. And they talked about their Instinct GPU and their EPYC server demand. It continues to drive AI infrastructure growth. They had a watch item because if you look at their gaming revenue, it was soft, and the investor expectations for AI accelerations, they just continue to be incredibly strong, incredibly high. So even though they beat earnings, it's one of those situations where it's just not good enough. They didn't beat it good enough. So that's why we see some pressure with this stock in the after hours. It's down by about 8%. In addition to those two items, we did see at SpaceX earnings that Elon Musk mentioned that he is exclusively using NVIDIA for his chips. And that also put pressure on AMD. But Arista Networks, they demonstrated the significant demand that we see for AI. So first time that the company revenue passed or reached 3 billion in a quarter, first time in its history. The AI cloud networking demand remained exceptionally strong, and Q3 revenue guidance of a 3.3 billion confirms continued hyperscaler spending. You just have to keep our eyes on the gross margin. It's actually there. It's moderated from last year's level. So I think it's like 73% down to 72%. So not a big jump, but it did moderate a bit. So we'll keep our eye on that. But revenue was strong, 38% growth year over year, and earnings per share was just over $1. Astera Labs, the revenue was up 104% year over year. Earnings per share were at 80 cents. Big signals here is the revenue more than doubled year over year. The Scorpio fabric switches are expected to become the largest product in Q3, so their next quarter. And their guidance for next quarter is between 540 million and 560 million with an earnings per share between $1.16 and $1.21, well above expectations. Here again, keep our eye on gross margins and what we expect to see in Q3 as product mix evolves with Astera Labs. But the verdict across the board, strong for compute, strong for networking, strong for connectivity, and strong for memory demand read-through overall. Good day on the earnings. This is going to mean a lot for the memory sector. And what did it mean if we jump over to SanDisk? So SanDisk, like I mentioned in the beginning, had a strong day. We're at 11% growth today on the board. You can see in the after hours, it's a little bit under 1% right now, about $12 coming back. The stock has its earnings tomorrow. I think we're going to see either one of two things. We're going to see a run up to near the end of the day, and then a little bit of sell the news going into the earnings because we've seen so much anxiety about this stock, and it's gained back some momentum. If we just look in the last week, we could see the stock is up 41% in the week. We know for the last month it's down 18%, but the stock has been on a really nice run over the last week. So we'll either see a continued growth or we'll see a bit of a sell the news for SanDisk, because I think their earnings are going to be incredibly strong that they drop in the street tomorrow. So I'm really excited to see those. I'm excited to see Western Digital as well. But we have to also call out that SanDisk is dropping stories right before their earnings that I think is even driving more sentiment with the stock. If you don't know, there's a massive conference going on right now called FMS. It's the Future of Memory and Storage. It's in Santa Clara, California. It's happening essentially today, the August 4th through August 6th. All of the big players are there. I encourage you to just do a search for FMS 2026, and you'll see a ton of stories that are coming out around innovative products, and different presentations from all the big companies and the big leaders. But SanDisk had two big stories that broke. So first, their partnership with Kioxia to demonstrate the world's highest density 3D NAND flash, 332 active layers, and up to 4,800 mega transfer per second for their interface. I would scroll down a little bit. The piece I want to call out here is they're just saying their new BiCS10 3D QLC NAND flash, the IC with record storage density, is aimed at data center grade SSDs that must offer both high capacity and decent performance enabled with high speed input output of flash memory. And the piece will go down here. Guys, this is the one area where they have a bit of an advantage. And they call it out here that as a result, the two companies will be able to offer ultra high SSD at prices that are lower compared to their rivals, or get higher margin while selling at similar prices. And by redefining the performance of efficiency, the efficiency envelope of the QLC NAND, our 10th generation BiCS QLC 3D flash memory, it delivers simultaneous gains in density, bandwidth, and energy efficiency, and establishes a new paradigm for high-capacity flash storage to provide scalable foundation for the next generation infrastructure applications. That's what the Chief Technology Officer at SanDisk laid out, but this is a great partnership and a great product for them to drop onto the market, or at least into the headlines. And then they also announced their partnership with SK Hynix. They actually shared some of the specifications around their high bandwidth flash. If you remember, about 6 months ago, they announced that they are working on this together to bring this solution to the market. Well, at this conference, in fact, they have a presentation on Wednesday the 6th to go through this, but you'll see some of the results or some of the specifications. So 6 months after they partnered to drive high bandwidth flash standardization, the consortium has reached a key milestone in unveiling the first HBF standard specifications. According to SK Hynix, the inaugural specifications support capacities up to 512 gigabytes using 8 high and 16 high NAND stack configurations with 3 bandwidth tiers, delivering roughly 0.4 terabytes per second to 3 terabytes per second. SK Hynix also aimed to accelerate the adoption of an open HBF ecosystem by rallying major backers like Google as well as Tencent. The specification disclosed through an open compute project adopts the industry standard UCIe interconnect, enabling HBF to integrate with a broad range of processors, including GPUs and CPUs. So that's a great sign as well. And then I would say, as we look down here, the big piece here is this is not a competitive memory source for HBM. We have to keep that in mind. This is a complementary technology to HBM rather than a competing one, according to TrendForce, with the potential to address high bandwidth memories, high cost, and limited capacity. So TrendForce believes that the long-term architecture will likely combine HBM for ultra-high speed computation with HBF for high-density data storage, creating a hybrid memory hierarchy that could become a key enabler of large-scale AI commercialization. And then finally, the roadmap for this, their industry forecasts that the demand of complex memory solutions, including HBF, will pick up around 2030. So it's not overnight, but this is a great move for the memory sector. It's a great product that'll come out. It'll solve a lot of problems in the market. It'll create more efficiency. It'll create more uses. It will be, in my opinion, a Jevons paradox for the entire market. So it wasn't just these products, these companies, though, that had announcements at FMS. Micron also announced a partnership with Microchip. So Micron and Microchip, they showcased the PCIe Gen 6 storage system designed to support growing artificial intelligence workloads. The setup combines Microchip SwitchTech PCIe Gen 6 switches with Micron's 9650 NVMe solid-state drives, creating a storage platform aimed at AI computing, cloud computing, and high-performance applications. Micron and Microchip said that the architecture connects processors with multiple storage drives while allowing the SSD to operate at Gen 6 speeds. PCIe 6.0 provides 64 gigatransfers per second per lane, twice the bandwidth of previous generation. So this was a great announcement for Micron as well, just showing that they're pushing innovation. And what did their stock do today? We saw the stock go up by 8%. another $63 on the board. And the after hours were down about 1.5%, about $12.51. Some of that is due, I think, to the stories I'm going to get to next, all around people's fears around CXMT. So let's get to that, because this is a good story for Micron. It actually tells two pieces. One, Micron's market share in the DRAM market is growing. If I scroll down here, you can see that Micron's newly released figures, I'm right here in the middle paragraph, about the DRAM market, which accounts for 80% of the company's revenue. Micron's DRAM market share, it came in at 25% in the second quarter. That's up from 22% in the first quarter, according to Counterport Research. So this leaves Micron just behind the DRAM market share of SK Hynix, which is 26%, and well behind the market leader, which is Samsung, at 39%. But there also is a bit of kind of mixed signal here, because what they are saying, well, first, if you see what Counterpoint Research Vice President says, he says that Micron's DRAM revenue has increased fivefold since the second quarter of 2025, positioning the company to surpass SK Hynix and likely claim the second spot soon. But they're also calling out that CXMT, it claimed 7% of the market share for the second quarter, which was up eightfold from the same period the prior year. And CMXT is also, they're sharing, is set to increase its share of global HBM wafer supply from 1% in 2025 to 12% in 2028, according to the semiconductor and AI research firm. And guys, what we have to also remember is, you saw that stat, or you heard that stat, around 12% of wafer share for CXMT. What I don't want you to think is that actually translates to 12% of the HBM share, because that's not the case at all. CXMT still need to reach that meaningful share of a nominal HBM wafer capacity. But then there will still be questions around yield, stack height, bandwidth, thermals, advanced packaging, and ultimately qualifications with major accelerators. So don't let the noise that you heard in that article, you saw in that article, and those concerns knock you out of the HBM market and the growth potential that we're going to see in Micron between now and definitely towards the end of 2028. And this is a power play for the company overall. But let's jump back over to the final playbook and wrap up the video. So for me, guys, when I pull up the playbook, you'll see the green, kind of yellow and red signals for the day. So clearly the green signals is Micron's growth in the DRAM market, moving from 22% to 25%, getting close to passing SK Hynix. That is a strong sign. Arista's revenue beats, showing us that it's just confirming the AI infrastructure demand. The potential optical ban that we see from the U.S. government, that is a significant tailwind driving the optical players right now. So we'll keep our eye on that right now. But Marvell, Lumentum, Coherent, Applied Optoelectronics, Corning are all great stocks right now, and I think they're going to continue to move. If I look at yellow signals, we're looking at CXMT rapidly expanding. We know they went to 7%, as I called out. They have a second plant they want to open up in Beijing, which will move their wafers to 600,000 wafers per month. But it is more on the commodity side. But we're seeing that commodity DRAM friction there. So CXMT may be able to solve some of that friction in the marketplace, but I wouldn't count out Samsung, SK Hynix, and Micron just to blunt that and stop it in its tracks. Because remember, CXMT is not a price advantage compared to the others. They just have the supply right now in the market. We're seeing a bit of mixed signals from AMD, great earnings, data center growth significant, up over 100%, strong revenue, but the shares have fallen 8%, given particularly around expectations being so high, but also what Elon Musk dropped on his earnings with SpaceX. Red lights, it is the retaliation, I would say. If the U.S. government puts any policy in place restricting China, we will see some retaliatory efforts. So that is a bit of a red flag for me. We're seeing weakness right now on AMD's gaming side, but also consumer weakness. We're seeing consoles kind of late, the higher prices that are reducing demand. So that may drive down memory demand overall. Optical adoption uncertainty, like I said in that article, co-packaged optics have been a little slower than we have thought. So we need to see those moving faster. That, again, will also just drive those optical stocks up. To me, guys, I think it's bullish, but selective is the read on the day. The AI infrastructure demand remains strong with multiple tailwinds across memory, networking, optics, but execution risks, policy uncertainty, and consumer weakness require active stock stock level selectivity. So let's jump over and just finally close for the day. I think today it was clear that the physical AI bottleneck is migrating across the system stack. Capital is rotating into every single one of those. Compute needs memory. Memory needs high-speed interconnects. Interconnects require optics. Today's earnings from Arista and Astera prove that the AI hardware build-out is running hot. And with potential regulatory shifts in the optical components, they're opening up massive opportunities for us as investors as we look at those domestic companies that are leaders in that space. So stay focused on the physical constraints that we track on this channel. Don't get distracted by the short-term sentiment that we see in the market right now, and keep tracking the real numbers. Guys, if you found value in today's video, make sure you give me a like. Make sure you subscribe to the channel. Drop your comments below, and I'll see you on the next one.